You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. On Thursday, it is time once again to break down all the crazy action in the world of all things futures options. Yep, it is time for TWIFO. My name is Mark Longo from theoptionsinsider.com. Cool destination, if I do say so myself. If you're looking for things to check out in between episodes of this show, theoptionsinsider.com will serve you well. Most active updates, of course, links to all of our fun shows. And of course, if you want to go above and beyond, not just get the on-demand content that we put out there on just about every podcast platform on the planet now, but if you want to go above and beyond, you can go to theoptionsinsider.com/secret club. Just check it out. See what it has over there. A lot of cool stuff. Then you too can join us live for this show, engage with all of our hosts and guests throughout the week, pro Q&As on Tuesday, options oddities on Friday, a whole bunch of other fun stuff scattered in between there exclusively for you cool cats there, theoptionsinsider.com/secret club. And however you listen, live after the fact, keep sending in those questions, those comments, those insights, those pearls of wisdom. We do love to hear from all of you folks out there. Let's see who we're hearing from on ye old TWIFO program today. I am pleased to be joined once again. He's doing his spring break tour of all the programs on my network. Today, he lands on TWIFO. He is Mr. Russell Rhoads, the professor over there at the Kelley School of Business. When he isn't moonlighting, writing a book or two about vol, or maybe researching some derivatives for EQ, or a whole bunch of other stuff, we call him around here the once future and now present Dr. Vix. Mr. Rhoads, welcome back to TWIFO, sir.
Is our doctor in the house?
There is,
Not
and
that
it is
kind of
you.
doctor, though.
Are you wearing a lab coat as I'm speaking to you, sir?
No, come on, dude. I'm wearing a cardigan, and it's green for St. Patrick's Day, by the way.
You're the kind of guy I can see you rolling into a conference, lab coat on, and correcting people saying, no, it's doctor. It is Dr.
I
Rhoads.
will not respond to, hey, you, anymore.
Dr. Rhoads only, as we keep on rolling.
In all honesty, it's still a little weird to me.
It probably would be weird for a while.
It is. It's going to take.
I want you to start
probably die before I'm used to it.
Cracking down on it hard. I want you to be. I will only, even to your family, I will only respond. Your kids say, "Hey, Dad," you say, "No, Dr. Rhoads."
They've been calling me Dr. Dad, and they find it funny.
She's not bad. Dr. Dad's got a bit of a ring to it. Let's see what else has a ring to it as we keep on rolling right on into the movers and shakers.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody. Welcome to the Movers and Shakers, the portion of the show. We break down everything lighting it up to the light side, a.k.a. the upside, and to the dark side over this past week since our last show at CME Group. You guys can check out these reports for yourselves at cmegroup.com/TWIFO or /TWIO, the places to go to kick the tires and light the fires out there. Mr. Rhoads, another crazy topsy-turvy week in the land of all things futures options. Where should we begin our journey this week? To the light side or to the dark side?
I'll bet you, if you're guessing in the back of your mind, you know I'm going to say dark side.
You know, that's something a Dr. Vicks kind of person would say. So, yes,
I'm twirling my handlebar mustache.
That's the thing. You need a sweet mustache now and a goatee to show the evil. It's like Evil Kirk. You know, you got to go. Because anyone who has a goatee is clearly and demonstrably evil, as I have proven for these last now 15 years on this network. So, yes, good stuff. Let's keep on rolling. Let's see. What do we got here? Let's go to the dark side. And, yeah, interesting stuff here. Let's look at the chart really quickly. And, you know, it's kind of evenly distributed light side to dark side. We got that one kind of outlier there on the dark side. We'll get to that in a second. But outside of that, from a pure numbers perspective, how many are moving up, how many are moving down, it seems pretty evenly distributed this week. Again, a little bit of outperformance to the dark side. So let's get there. Number 5 on soybean oil. I guess you can see it from right here. It only cost you 7.75% to break into the bottom 5 on the dark side, only about 3.5% to the upside this week. So a little bit of a magnitude difference there, but overall number of movers, they're pretty equal. Number 5 to the dark side this week, soybean oil, like I said, off 7.75%. So a little bit of a break there, perhaps in the ags after a crazy week. It's kind of one of our few ags on the movers and shakers after a couple of weeks where ags have been dominating the talk. Not so much this week. Number 4, platinum. So off to the metals, off 8.07%. This week, it was number 3 in the other direction last week. It was up almost 4.75%. Number 3, palladium. We've been talking about palladium for a while. It hit some ridiculous highs lately. Coming off those now, off 9.91% this week. It was number 2 in the other direction last week, up 7.14%. Number 2, I've said it before, I'll say it again. This is one of the 3 names you could reliably guess every week, and you have a pretty strong chance of it being somewhere on our list. It's lumber, coming in this week at number 2 to the dark side, off 13.61%. It was number 2 in the same direction last week, off about 7.75%. So nice over 20% down move just in the past couple of weeks. And that's kind of quiet for lumber, all things considered. And number 1 with the bullet this week, Eurodollar is off 26.22%. It was number 1 in the same direction last week, off 19.44%. Now, before you get all hot and bothered by these crazy big moves in Eurodollars, I've talked to Nick about this, and he's mentioned on the show before. Sometimes it's hard to get an aggregate average for what we're seeing out there across all of the legion of trading months and futures and everything else going on out there in the Eurodollars. So take that overall number with a bit of a grain of salt, but still, it is a lot of dark side for the Eurodollars this week. It's also our only rates offender this week, which is kind of interesting. Now, to the upside we go. Number 5 to the upside, like we said, up about 3.5%. It's feeder cattle. Number 4, one of our other top 3, you can always guess, and usually it's here somewhere. It's Bitcoin. This week, it's number 4 to the upside, up 3.68%. It was number 3 in the other direction last week, off about 6.75%. So it's been I wouldn't say rock'em sock'em, but it's been a little bit of movement out there the last couple of weeks. Number 3, heating oil, back to the energy, up 3.83%. Number 2, our old friend the Nikkei, the yen-denominated Nikkei, up 4.07%. This one pops in there a lot lately, and before you ask if we can break it down, not really an options player at all. So not really a place to sink our teeth into there. And number 1, the third, all 3 of our trifecta of frequent offenders are in our movers and shakers this week as we go off to nat gas. Number 1, up 5.92% this week after taking a bit of a break over the last few weeks out there. All right, Mr. Rhoads, there's a lot popping off across the broad spectrum of commodities, but I think we have to begin our journey in the energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, welcome to the energy section. You guys know where to go to check out these reports for yourselves. CMEGroup.com/TWIFO, and then go into that drop down. You'll see the asset class there on the top left. Scroll down to the third section. You got ags, then we got crypto, and then we got energy right there. Then we're going to hang out in the top there first. Going to go to WTI first because it's on the top of everyone's mind. Of course, crude oil across the board, WTI in particular, but Brent also feeling the heat out there as well. WTI was heading for about a 13% down week since the start of the week. That's the worst weekly loss it's had since April of 2020. It has pared some of that back now. So it's not off 13%, but off about 6% on the week. But still, Mr. Rhoads, a lot of downside on the screen right now. As we're coming into the start of the show, WTI still north of the par level, right around 102.60 or so. But obviously, everyone's talking about all things crude. What's lighting up your tape in the crude space right now, sir?
I'm kind of surprised at how much put volatility we've got here, and I'm fumbling around to try and get to the page and trying to keep up with you here. But I would have expected. Come on. It's you can't see what's going on my screen, but I think it's because I'm streaming NCAA basketball all over the place at the same time.
That will probably do it. Yes,
but I'm surprised that it came off as quickly as it did. But then if I could get the skew to pop up here. There was something I saw on the skew earlier that I wanted to comment on, and my screen is just not filling out. So take it away from me, and I'll chime back in. I promise.
You got to stop streaming all that quote unquote basketball.
My computer is just stuck, and I've stalled as long as I can. So go ahead.
I will fill for you while you refresh your content there. But we did see those futures take a bit of a hit, like we said earlier in this week. Even yesterday, we saw WTI trading in the mid 90s or so range before, and that's dropping down from it was 120 last week on Tuesday. So that is quite the drubbing before kind of regaining again back to that ever so important par level. A lot of things have been weighing on crude oil of late. There was some hope maybe for a bit of a détente in Ukraine. Maybe not so much that happening anymore. Of course, all this talk about perhaps getting some Iranian oil back into the marketplace. That is lifting hopes for easing some of those supply concerns people have had ever since this Ukraine fiasco kicked off out there. Some of that weighing on what's going on out there as well. So a combo for a 1-2 punch coming into showtime now. Like we said, that WTI future right back above the par level, 102.60. It's still off a little over 6, about 6.2%, or nearly 7 handles on the week. But again, rebounding from those lows it was hitting yesterday. And how much paper is hitting the tape out there this week? It's a pretty active week. Normally a good week for WTI would be 450,000 contracts. You hit 500,000, you're looking pretty robust. We hit 1 million recently out there. And this week, no slouch either. 760,000 contracts on the tape right now in WTI. So this one is lighting it up out there this week. And what is the most active contract this week? As we're looking at all this paper, we're talking about the breaking through the par level, then breaking back through the other direction. It was the 95 puts that go out today. These are going away any minute. In fact, they might have, I think since we started the show, they may have actually gone off the board. So I can't see exactly when they traded throughout the week anymore, but they were going away in 0.01 days, listeners, when we started the show. So pretty much gone now. But the 95 puts did put up 18,500 contracts this week. So that was our number one trade out there. Obviously, if you listen to the show, we have to go a little bit farther out, even though crude oil these days starting to trade more like an equity now. We're seeing the 1 day, 8 day contracts all putting up some numbers. Let's go a little bit farther out. Of the paper this week, I said 700 plus thousand contracts. Over a third, 34.1% went up in that front contract that's going out as we speak. So a lot of very near dated paper, a lot of high gamma trading, which again, look how much we're whipsawing out here. It makes sense. Let's go a little bit farther out now. Let's go to the April contract. Actually, no, let's go to the May contract. Let's go to the May contract. I did 22.5% of the paper this week. So we're going to hang out there. That has a nice, healthy 28 days to go. So we can sink our teeth in there. If you're wondering what is the vol on this contract, 71.75, kind of unched on the week. It hasn't really changed, which again, we're whipsawing, we're selling off, we're rallying. That all equates to vol at the end of the day. I know everyone thinks of it from an equity perspective. Its only downside is vol, but movement is vol at the end of the day. And we're certainly seeing a lot of movement, certainly enough to maintain this roughly 72 level we're seeing in the May contract. In terms of skew last week, the puts, no one really wanted to touch them. They were 3.6% cheap. This week, getting cheaper, 10.6% cheap. So nobody wants to touch them this week either, which is interesting. Probably some of that having to do with the rebound we saw over the last 12 to 24 hours. If we were still down at those levels from yesterday, I got a feeling maybe those puts might be a little bit more in demand. The calls, 8.8% rich last week. This week, 12.5%. So the calls getting bid, puts getting offered out here, which is a kind of interesting. Again, that's what you normally would see if you're just moving gradually down the skew curve, but we've been kind of whipping all over the place. So intriguing stuff. Also active out here in this May contract were the 70 puts, 7-0, doing nearly 12,000 contracts this week. So that was a pretty active contract. Let's see if we can sink our teeth into that one a little bit before I toss it back to Mr. Rhoads. Here we go. 70 puts doing 6,400 contracts today and 5,300 on Tuesday. So that's pretty much all your paper for the week. Opening on Tuesday, we don't know today's action, obviously. So 70 puts, that's even beyond our question of the week, which we'll get to a little bit later in the show, where we're asking you guys what you want to position in from a longer term end of the year perspective in WTI. These are 70 puts going out in about a month, doing a lot of paper this week, 12,241 contracts and trading a ton today. I'm looking here if there are any verticals. There was some action on the 80 puts as well, but nowhere near the same amount. So if they are going up, it's in ratios or something else, which is kind of interesting out here. So 70 puts, I would not have guessed. It wasn't that long ago we were well south of that, but that seems a pretty far, long way to go out there right now. Let's look really quickly, see if you see any other aberrant paper. The par calls, lighting it up in Dees 11,000 times this week. Again, that's a pretty psychologically important level. Not exactly surprising. The big day for those was Tuesday, 4,200. Most of that closing, again, we were kind of whipsawing all over the place there. Wednesday, so I feel bad for any folks who took off their par calls on Tuesday and Dees before we blew back through them today or even yesterday. 3,700 yesterday, so it's slightly opening. So again, back and forth on that strike as we've been whipping all over the place. About 3,000 today. Also worth noting, if you think par is rich, the June 2023 125s were going up this week as well. They traded actually kind of actively throughout the week. About 700 today, 300 on Monday, and about 400. So talking about 1,500 on the week of the 125 calls. It looks like it's a 95 par 125 strip, all going up 300 times on Monday. And then two of them, the 95 125s trading on Wednesday, and the 95 looks like maybe the par isn't part of that. Something else is going up too. Maybe the 200s also traded 500 times on Monday as well. So Monday was a crazy day, but it looks like it was the 95 125. So that 30-point wide vertical was going up 1-to-1, 300 times on Monday, 422 times on Wednesday, and another 422 times today, plus a little extra, looks like here. So if you wanted some funky upside, there you go. All right, Mr. Rhoads, I bought you a ton of time. Have you been able to analyze the options activity, sir?
Well, I did, and I was freaking eloquent, and I didn't realize you couldn't hear me. But what I was saying
arguably the most eloquent you've ever been, sir.
I know, it's the best I've ever done, and the only person that knows is my dog. So what I was commenting on was I had seen that put that you mentioned that has now dropped off the screen. And that's what I was scrambling around looking for, the one that was most active, but also what pointed, and I'm still on oil. Looking at the May contracts, the 70 put. What? I mean, who's buying those things?
Yeah.
What do you think's going to happen?
That's what I was talking about.
Kumbaya?
I was trying to see if there was some vertical or some other action that could explain it, and it doesn't really seem like there is.
No, somebody's somebody's locking in their oil price above 70, and I'm sure there's a justifiable reason for that one. But that was what I knew. There was something when I looked at the board earlier, but it looked confusing to me because, as you said, and I even used one of your favorite phrases, those 95 puts that they've gone the way of the dodo.
I'm glad to see I have infected your vernacular, sir.
I've used that.
If not else in this life,
steal it from you.
If I can give you a few phrases here or there, then I have done my job, sir.
Exactly. So there. That's I was surprised to see puts. And somebody's really got a bearish outlook for oil into September, looking at the 68 puts.
Since we're talking crazy puts, let me bring this up now rather than waiting for the end of the show. By the way, it's like the numbers have tightened up. We put this live. Our question of the week is really not the question of the day because it's only got about 1 day to go. We're asking you along these same lines, if you had to buy one option right now on WTI that expires at the end of the year, so not right now, not March, not even May, but end of the year, December, which one would it be? We gave you two choices. We gave you the Dees 115s or the 85 puts. I got a feeling I know who that 70 put buyer or what he would choose, Mr. Rhoads, but what would you choose and what do you think our audience is choosing?
I would choose the 85 puts as well. And I haven't gone and run the numbers, but I severely doubt that we've had oil over 100 consistently for 9 months ever. You see what I'm saying?
Yes,
And that's the time frame there. So that's why I would choose the 85s. Now, if I don't have to, if I can exit them between now and the end of the year, that would be a little bit of a different story. I might actually think about the 115s because I think you could put a limit order out there and get hit on it, much like I got hit on overnight on selling oil at 100, which I had bought in the low 80s. I was kind of happy that happened for a little while.
There you go.
But really, that if just thinking back and without running the numbers, my assumption is we've never had 9 months of oil in the triple digits, and that we will probably by the end of the year we'll probably see it come down some.
Yeah, it seemed like initially when we first posted this, it was all puts all the time. I would probably lean that way myself. But yeah, it seems like in the last hour or so, the call brigade has come back in because it was about 70+% saying the 85 put. Now it's almost 50-50. It's 56% for the put and only 44%, I should say, for the call. So a lot more love for the upside call than I thought, Mr. Rhoads. Get over there at options, make your voice heard. Mr. Rhoads, before we roll out of energy, we gotta talk about our number one offender to the upside this week. This is natural gas. This has been kind of the lead story for a lot of this whole Russian debacle out here is what's going on with nat gas. That has, of course, spilled over into oil and then, of course, wheat and ags as well. But nat gas was kind of the vector. A lot of people first saw this invasion through the lens of nat gas. Coming into today's show, back up, threatening the 5 handle, 496 to be precise, as we're kicking off this segment here. Mr. Rhoads, anything lighting up your tape in the world of natural gas?
No, it's I think it's kind of like you would expect. Calls, maybe one put on there, but and this is with this market as volatile as it can be. It's got some really nice at the money implied volatility right now. It's funny. You asked the question, and I said that I would go with the 85 puts. I think if you asked the same question with this market, you'd get more call buyers than put buyers.
It seemed like that was the case for a while. We were talking, I think maybe the last time you and I chatted about how these 7 calls were active throughout almost to the end of the year. Doesn't seem like that's the case right now. They're a little bit less optimistic. We're talking 5s and 6s, but still, yeah, you're right. A lot of call action out here this week. Let's break it down, listeners. You guys know where to go. Stay in that energy drop down. Pop out of crude oil, go into nat gas. You'll see right now a pretty active week, but not quite the rock'em sock'em robots week we've been seeing of late. About exactly 250,000 contracts on the tape right now. So decent paper, but not blowing the doors off this week. And of that, again, getting kind of equity-like, about 33%. So pretty much exactly a third going up in this contract that has about 11 days to go out here. That's pretty close to our frame of reference. We also have the May contract that has 40 days to go. That has, that did about 24% of the paper. So maybe we'll do a quick combo of both because they're kind of interesting and they're both kind of back to back here. In terms of the vol, if you're wondering, in that 11-day contract, it's about a 51, up about a little over 0.75 of a point. And in the May contract that has, let's see, about 40 days to go, that one, the vol is about a 53, up about 3/4 of a point as well. So again, these kind of contracts are kind of neck and neck, even though a lot of time separates the two of them. Let's see, that front contract, the puts last week, 4.1% cheap. This week, 5.9% cheap. The calls last week, 5.9% bid. This week, 7.6% bid. So the love has been to the call side, and that continues this week. Something similar here in the May contract, about 5% cheap were the puts last week. Nearly 7% cheap this week. So puts getting cheaper. Calls staying pretty much the same level of bid, ticking up a little bit. They were 8.2% rich last week, 8.6% rich this week. And in terms of the most active contract, what is lighting up the tape out here this week? If you said 5 calls going away in about 11 days, you are the slight winner. It just barely outpaced the 4 puts going away in May. Both of them did slightly over 9,000 contracts. Let's go to the 5 calls first, because that's pretty much where we're hanging out right now. These were pretty active throughout the week. The big day was today, though. Nearly 5,000 on the tape today. Almost 3,000 on Tuesday. About 1,000 of that was closing. And the rest kind of scattered throughout the week. Total of about 9,300 going up this week. So again, we threaten the 5 strike, retreat from it. We move around it a bit. So it's not surprising to see this strike lighting it up this week. Net on the week looks like they took off about 1,000 contracts of OI. So again, a lot of back and forth trading on this strike, which is not exactly surprising. Actually, I take it back. There is a number 2 right between the 5 calls and the 4 puts, and that is the 4 quarter puts, also going out in about 11 days here. They did about 9,300, so they're 14 contracts behind the 5 calls. So the 4 quarter puts also very active. Opening looks like throughout the week. The big day was today, a little over 3,000 going up today. 2,200 on Tuesday and Wednesday, and 1,600 on Monday, opening all of those days. So a lot of opening 4 quarter put paper as well. Looks like the 4 halves were also active around the same amount, 9,000 contracts. So maybe some 4 half, 4 quarter verticals. I'm looking. It looks like the paper lines up pretty well. So I wouldn't be surprised if there were some fairly tight, but not that crazy. Given how nat gas trades, 1/4 of a point isn't that tight. So let's say it looks like a 4 half, 4 quarter put going up a lot of this week, if not so much today here. So intriguing stuff. Then we get to the 4 puts in the May contract that did about exactly 9,000 contracts this week. The big day today. So all that action was today. 6,300 today. The rest of the week, forget about it. It's all about today out here in these 4 puts, doing 6,300 of their 9,000 contracts today. So a lot of action. There's like the 4 quarter puts also going up today about almost 6,000 times as well. So once again, looks like about a 1/4 of a point vertical. That seems to be kind of the popular spread width for a lot of these spreads we're seeing here in nat gas. Again, 4 quarter puts going up about 6,000 times today, and the 4 halves about 3,000. So you could be a 1x2x2 if one were so inclined out here. But intriguing stuff. Also 3,000 on the 4 quarters. So it looks like the 4 half, 4 quarter went up 3,000 times, and maybe the 4 quarter 4 went up 6,000 times. So they could be, again, we don't have the OI numbers for today's paper. We'll have to wait and see on those. But a lot of action on the puts here. Let's go a little bit farther out, as Mr. Rhoads was alluding to, just to see what's This one just brings a smile to my face. The 20 calls traded 4,100 times this week. The March 20 calls. My goodness. Mr. Rhoads, did you see these? 4,100 of the March 20.
That's like, and I know this isn't the right show, but that's like when they're trading the 150 calls and picks.
Yes.
Actually, that's even worse. You know what? That's like trading the 300 calls.
I don't say that. That might be beyond that. That might be like a 200 level. Yeah.
Yeah. There is one thing on, if you scroll back up and you look at the first 6 contracts going through September, notice that the put call ratio is well above 1 for 4 of those 6, even though it's a bunch of calls is the most active contracts, especially when you're looking at when you go out to July, August, and September. I just find it interesting that although the calls are the most active ones, the 6 and 7 calls, we've got a lot more puts than calls trading. So you might, there are plenty of folks out there looking for lower natural gas prices. They're just not concentrating it in a single contract.
Yeah, I just broke down a ton of looks like strips and rolls and put spreads going up all over the place here. So you're right. Puts are very active, even if people are fixating on absurd nonsense like the 20 calls. That just brought a smile to my face. That's obviously some absurd extreme risk management play. If you're worried about the 20s, I got to wonder what you got on. That's kind of interesting to me, but still intriguing stuff nonetheless. Mr. Rhoads, you spent roughly half an hour already on the energy sector. Probably could talk more, but there are other complexes lighting it up. You are our guest. Where should we hang our hat next?
See, the two places I want to go didn't have a lot of active stuff. So I'm going to give you two. I'm going to give you a choice A and B, and you can take it from there. Either equities or metals.
Okay. I think we can make both of those happen. I will flip a coin now, and we'll see what we get.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, you know, if we got the once, future, and present Dr. Vix on the show, we're going to have to talk a little bit of equity vol. And coming into showtime, the narrative for most of those products from a vol perspective, at least, is down. We're coming back down. RVX starting to threaten the 30 handle again, right around a 31 when we kicked off the show. That puts it down about 5.25 points from last week. Again, RVX, the VIX of the Russell 2000 listeners. VIX itself, VIX cash, hanging out at about a 25 and change right now. So that's well shy of the north of 30 it was on our show last week, down 6.25 points from where it was this time last week. VVIX, so the volatility of volatility, down a whopping almost 20 points, 19.25. That gets it down to about 107.5. So still frothy, but well below some of the levels we've been seeing of late out there for vol of vol. And VolQ, a.k.a. the at-the-money vol of the NASDAQ 100, a.k.a. the product created by Scott Nations, will be joining us on our Pro Q&A next Tuesday. So if you have questions about all things NASDAQ, vol, skew versus lack of skew in the vol space, all sorts of things, volatility, manipulation, his new book coming out, all kinds of fun stuff. Start getting them in now for the Pro Q&A next Tuesday. If you're not in the secret club, man, you got to join. You're missing out on a whole bunch of fun stuff. TheOptionsInsider.com/secret club. But the vol Q at about 26.5. When we kicked off the show, it's down about 6.25 points from where it was this time last week. That puts that VIX to RVX, so that large cap to small cap vol spread, a little bit shy of 6 points, about 565 or so. That's about almost exactly a point wider than it was this time last week. That spread was starting to tighten up for a little bit, not so much this week. And VIX to vol Q still hanging out a little bit north of a point, about 1.1 points. That's pretty much unched from this time last week. That spread has been kind of fun to watch. Mr. Rhoads, I know you watch a lot of NASDAQ vol these days as well. Have you been watching that NASDAQ to VIX vol spread? It kind of went away for a little bit, which was weird. Now it's back to about a point. And what's catching your eye throughout the rest of the vol complex this week, sir?
Well, this is in like you said, on my spring break tour while everybody else went elsewhere. I've been spending a lot of quality time with you.
Which, sir, is obviously time well spent, sir.
It is. I always enjoy being with you guys, as long as I don't, unplug something or my dog doesn't chew through a cord while I'm trying to talk eloquently about stuff. I pointed out in a lot of different forums that February, March is typically a seasonally low time for VolQ. That's the 2 months where VolQ usually spends a good portion of the closing days under VIX. It's only happened, I believe, one day in February and March this time around. I do feel like if we get to some normalcy where VIX works its way back down to the low 20s or the upper teens, whatever we're considering the low end these days, that VolQ will race it to the downside. And when we get to kind of a normal volatility environment, if we can do it by the end of the month, that will be you're better off shorting NASDAQ vol than S&P vol, I guess is what I'm trying to fumble around with here. But then about mid-April, when we start eyeing first quarter earnings, that's going to pop back up. So I think there's a short, if you're one of those guys that likes the Stock Trader Almanac, but you'd rather apply it to volatility, the seasonal time to be short volatility on the NASDAQ is now for about 2 more weeks. I think there's an opportunity there. And eventually, I think the next time you have me on this program, VolQ will be below VIX. I was looking at RVX, which is not just because they finally named a volatility index after me, but just because I love RVX. I think I like how it has its own behavior as well. It's more of a domestic volatility index. It has not been below 30 since January 14th. Actually, I just got that wrong. February 1st, it ticked, or February 2nd, it ticked below 30. But it's had a nice long period of time above 30. And I'm going to have to go looking at what the streaks have been, and what do small caps do after RVX has been above 30 and then falls below 30. We've had streaks for VIX above 30, where when it falls below there, you have a much better chance of making money. Being long stocks, it closed below 30 for the first time a couple of days ago, and lo and behold, we have seen an equity market rally. So I want to dig into the same thing with RVX.
Yes, it would be nice if we had a tradable RVX again, but alas, not so much.
I keep asking. I'm talking to them tomorrow.
There you go.
Talk to the RVX folks tomorrow, and I will mention that once again.
Put it out there. Let's see if we can get some. How fun would it be, listeners, right now to be slinging some small cap volatility? But, since we're talking about small cap volatility, let's get into that really quickly right now. Go into that drop down, listeners. Go into the equities. Go into the Russell 2000. Pretty active day, pushing on 30,000, or I should say active week, pushing 30,000 contracts already. Of that, it's an equity, so a lot of that's going to be, shall we say, front-loaded. Unlike the S&P, and I was even just looking at the NASDAQ right now where Russell was talking, seems like people are doing the old selling the garbage puts in the weeklies in NASDAQ now as well. 13,000 puts going up all week long in the NASDAQ, even as we're hovering around the 14,000 level. So S&P, if I pull up the E-mini right now, it's going to be the number one trade is going to be whoever is out there harvesting those garbage puts. I don't see that same kind of paper in the small caps, which is kind of interesting. In fact, the most active contract right now is a now slightly in the money call going out in about a day out there. The 20-half calls were pretty active. We're at about a 2061, almost 2062 right now in small caps, listeners. So again, you see a little bit different paper in the small caps than you do in a lot of the other large equity indexes, where it's all about harvesting the garbage, picking up the pennies before the steamroller, as we used to say back on the trading floor, and doing that week after week after week. There was some put action in small caps this week as well, but it was farther out. It was in the week 3 April contract, and was the 1830 put. So again, those are over 200 handles out of the money, but almost 230. Those are going up pretty actively as well this week. So we do typically see put action in Russell 2000, but it tends to be, again, longer term. It's not the front week stuff. When we look at the front week stuff, it's actually usually, as Matt, who's put it on this show before, the small delta calls, folks coming in and loading up on a lot of that kind of upside swing for the fences type of paper. So we're seeing some action in those, quote unquote, actually now in the money calls. So they're not that small anymore. They're beefier now, but they were small when they started trading. And also some 1830 puts. Let's look. Well, we're kind of coming up against. Otherwise, I would swing into NASDAQ. Instead, let's swing into Mr. Rhoads' other favorite complex. It's time to talk the metals.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the metals. You know where to go. Go into that drop down, pop out of equities, go all the way down to the bottom to metals, and we're going to hang out in precious first. Mr. Rhoads, which of these very precious, very shiny metals should we focus on first, sir?
Let's go with gold, just because it's at the top of the list.
Never heard of it. What are you talking about?
It's the one. Honestly, if it weren't for the Ukraine situation, I would have made you start with silver.
What's catching your eye in gold, sir?
Gold, it's you got the near-term options that people are loading up on the 1900 puts, I guess, that expire tomorrow. And then next week they're looking at the 1800 puts, which that's kind of surprising to me once again. Although it looks like maybe the 1800 puts, they may be getting out of them and salvaging what they can. But just the fact that people are expecting or looking toward a little bit of downside is a little surprising to me, just with respect to gold. Again, I really liked that question that you had about the 85 calls versus the 115 calls. Not that I don't always like the survey questions you guys do, but you've got me thinking like that with each market that we talk about today. And if you were going to stick me with December options on gold, I would in fact, the most active December options are the 2,300 calls. I totally see that. That's something that I would totally be going along with for sure. And yet the skew just looks incredible to the upside on gold right now, despite puts having some decent volume there in the front two contracts, not to say the first 2 months. So, I think there's a lot of upside for gold. I think not in part of it's, I think that inflation's going to be with us longer than a lot of people expected. It sounds like the Fed's not going to fight it like they should, at least listening to the comments yesterday and looking at the way that the market's reacting now, now we went from less than a 50% chance to greater than a 50% chance that the next rate hike's only going to be 25 basis points as of yesterday, which if you are worried about inflation, that should be extremely worrisome. Eventually, gold is going to help you out with inflation. And year to date, it's up only about 7 or 8%, which is just pacing, I guess, with year over year inflation. But on a year over year basis, it's up around 20%. You're going to get people that pile in periodically on the geopolitical stuff. You're also going to get people that pile in based on inflation concerns, even though it hasn't done as well initially relative to inflation, but maybe it's playing some catch up now. Maybe people finally realize that Bitcoin is not an inflation hedge. I don't know. But
yeah, I did see a lot of debate about that because that was obviously the play, right? Last year when people were piling into crypto, driven a lot by inflation, and now people are starting to second guess that, sir.
And IU, Indiana, does something really cool every year for all the community groups around the state. They send they send professors that are also practitioners like myself around to talk to community groups about the markets. And we did this back in November. And during the process of that, everybody's attitude about inflation, it was like a 2-week roadshow. Everybody's attitude about inflation went from nobody cared about it at the first meeting to about half the room was worried about it at the last meeting. But also, I would field questions about, will crypto work as an inflation hedge? And honest to God, my response was, if I was like one of those crazy Bitcoin people, I would say it's a great inflation hedge. It's a great deflation hedge. It's a great diversifier. You got to own it. Regardless of what's going on, there's a camp that's always going to say that.
Well, yes, the hodlers will not be dissuaded,
the hodlers.
Sir. It used to be the gold bugs.
Stonks.
It used to be the gold bugs were the hardest core people on our network. Now,
yeah.
By far, it's the hodlers and, of course, the apes out there who love themselves some AMC and whatnot. Let's see what we got out here in gold this week, listeners. Pretty active week, all things considered. 285,000 contracts on the tape for gold. So that's nothing to sneeze at. Again, it was Fed week, so that's going to drive a little bit of action in the shiny stuff as well. Mr. Rhoads kind of broke some of it down for us, right? We're at about a 1941, almost 1942 coming into showtime, off about 43 points or a little over 2, about 2.2% on the week. In terms of action, about 32% of it going up in the April contract. That goes away in about 11 days. I will break our rules just to hang out in that one. It's a little bit shorter than I like to go, but that's where the action is this week. The vol, before we get there, the vol in gold right now, 19.5, off about 3 points. So I've said it before, I'll say it again. When you catch a nice bid in gold vol, you kind of got to get while the getting's good because it doesn't tend to last very long, and we're seeing that come off right now. Even though 19.5 is still comparatively elevated for gold, so we can get much lower out there in gold vol land. Skew-wise, last week the puts 3.6% cheap. This week, even cheaper, almost 7% cheap. And the calls, as Mr. Rhoads alluded to, maintaining their bid and then some this week. They were 7.7% rich last week, 10.2% rich this week. And speaking of calls, that's where the action was, even though the number one trade only separated actually by, looks like, by about 101 contracts. It was the 19.5 calls. So now slightly out of the money calls going up pretty much all week as we were vacillating around this strike. Pretty much 1,500 to 2,000 every day, slightly closing throughout most of the week. Again, total about 6,250. Followed hot on its heels by the 18.5 puts doing 6,149 out there. Again, pretty active throughout the week. The big day was Wednesday, 2,200 on Wednesday, 1,800 on Tuesday, about 1,300 today. Again, mostly opening throughout the week. But, the story in gold is mostly told a little bit farther out. And 2,200 calls were also going up this week in May, 5,000 times. 2,100s going up 5,800 times in June. 2,500s, 1,500 times in July. 2,300s, 3,300 times out there in August. And then, as Mr. Rhoads alluded to, December, where all the quote-unquote fun paper tends to hang out. The 2300 is going up 1,500 times this week. Also, in case you're wondering, the 3000s traded 721 times. Looks like that might be a 2,500, 3,000 vertical. I don't know. I'll have to go dig in a little bit more. But again, if you want your outlandish paper in gold, you got to go to the longer term contracts. And speaking of outlandish, your questions are never outlandish. Let's get to some of those now. A little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, welcome to your feedback segment. Just checking here on our poll. Still hanging out around 55-45 for the put. But again, it's kind of neck and neck. You got till tomorrow to make your voices heard. We had an interesting comment here from Ozzy. Ozzy said, I would even buy the AUG 85 puts because crude oil tends to go down around the 4th of July week. So that's kind of the point Mr. Rhoads made, too. If he had a little bit less time, maybe he could play with it a little bit in terms of the call, then maybe and he could get out of it before the end of the year. This guy, Ozzy, would even go buy the AUG 85 put. He says the seasonality in crude works out to that favor. So intriguing stuff. Get over there at Options. Make your voice heard. Speaking of the oil markets, let's go out to our live chat here. Mr. Unlimited, he wants to know, will there be a big impact to the oil markets if Saudi Arabia steps the wand for oil if we get to energy? Yes, spoiler alert, we did get to energy. Mr. Rhoads, what are your thoughts? There is some talk now. Saudis being a little bit recalcitrant, being a little bit uppity with us these days, trying to open the kimono a little bit more to China. You know, previously they'd only traded for crude in U.S. dollars. Now, perhaps opening it up to China. What are your thoughts on this, sir?
I'm really concerned about not just that, but the rest of the world and how they don't seem to really want to help us out. And I saw a thing about trading partners. And 20 years ago, about half the countries in the world, we were their number one trading partner. And Saudi Arabia was one of those. And now about 90% of the world, their number one trading partner is China. So we don't have the economic influence that we used to have. And I think that lack of economic influence is causing folks that used to work with us when we needed maybe something like lower oil prices to not react as quickly or not to pick up the phone as quickly as they used to. So I wonder if this is part of a bigger geopolitical shift where we don't have the economic power that we used to.
Yeah, I think the near-term impact of this is still a little up in the air, MU. There, I think the nearer-term impact on crude right now is the potential for us to waive those sanctions on Iran. That would bring a flood of Iranian crude back into the market, and that obviously would have more near-term price ramifications. This is more what you're talking about, a bit of a more longer-term shift out there, and it also has to do a lot more than just with the crude markets, but also, as Mr. Rhoads alluded to, kind of our international alignment. Sounds like the Saudis looking to mix things up a little bit out there. So yeah, nearer term, I think Iran's a bigger, more meaningful impact on the price. But longer term, if things sour between us and Saudi Arabia, that could certainly be an interesting development out there for crude in the long term. Let's go out to, let's see, what do we got here? Let's go out to, I guess really quickly, this is not really a futures options question, but they sent it into this show anyway. Scar, a longtime listener, Scott Somer, I know he likes the show over there on YouTube. He's one of our tube listeners. He wants to know about the nanos, Mr. Rhoads. He says, nanos, not sure enough brokers are charging proper fees that go with single multiplier options, and the quoted spreads aren't helping either. You know, it's funny, until this question came in, I completely forgot that those nanos launched on Monday, but they did. I have heard not a whiff about these things. Since that's your old stomping ground, Mr. Rhoads, do you have any thoughts on the early days here of Nano, sir?
I just can't fathom. Is Nano like one option for one stock?
Yes, 1-to-1, no multiplier anymore.
When I was there, and I can use the we when we were there, we tried the 10 multiplier options on high price stocks, and those worked really well until they started charging fees on them, and then everybody was using those options. The pros were using those options instead of the 100 multiplier because they were saving on the fees. I just don't see where the market is for something like this. I understand that the option space has seen a massive amount of growth from the retail sector, but I just don't. This is not. When you work somewhere that launches a lot of different new products, this is not one I would have gotten all excited about, having worked there. And honestly, I've been there a couple of times lately working on some projects with them, not Nanos, and I had forgotten that they were launching them as well. I knew they were coming, I just didn't know they had launched.
Yeah, I think a lot of people didn't know much about these because I completely forgot that they were launching this week. So Scott, thanks for bringing it back to our attention. I have not seen much about them at all, which maybe tells you something, but intriguing stuff. Here, we'll keep an eye on these. What are your thoughts on 1-to-1 options? Listeners, let's get there. By the way, speaking of getting there, let's get to this one here from William. He wants to go out to treasuries. He says, what are the best options for trading treasury vol, but in a securities account? Well, of course, obviously, our first recommendation is going to be to dive into the actual options on the treasury futures, but you want a securities account. So it sounds like you're not maybe ready to take that leap to the futures options dark side. Mr. Rhoads, what do you recommend for somebody like William, who maybe wants to dip his toes in treasury vol, but maybe not ready or unable to go into the big boy products?
Maybe the ETFs that are based on treasuries, and then there's also there are a couple of indexes that SIBO has out there. There's a high yield and an investment grade. I know one of them coincides with the HYG ETF. But I think that would be that's the direction I would go if I only had a securities only account, is maybe seeing if there are any of those interest rate index markets that I'm able to trade, especially the HYG equivalent, or just looking at the TLT and options on the TLT. When I was at SIBO, and I think they may still do this, we looked at developing a volatility index that used the options on the TLT, which is an ETF that I think goes 20 plus years on U.S. Treasuries. So those types of products are probably the direction that I would think about going.
Yeah, I was going to definitely go for TLT as well. When it comes to depth and liquidity, it's kind of hard to match a TLT from a Treasury ETF perspective. The ADV right now, listeners, is 152,000 contracts. So that's a lot of paper to go up on a given day out there. So at least, I know there are other concerns about how all these ETFs are constructed. We won't get into that. I'm just looking at it from a pure options perspective, and that looks like what you're looking for here. From a depth and liquidity perspective, it's going to be hard to beat TLT out there. And from an action perspective, Mr. Rhoads, it's kind of hard to beat lumber. I hear you have a tale you want to regale our listeners with, sir.
Well, this is kind of funny. My oldest is a junior in high school. She goes to a school out here in the western suburbs, and she's somewhat of a wallflower type person. She actually has been in your studio before. She talks about she opines about that because she wants to go into the media business, but behind the scenes. And one of the things that she is in charge of is building the set for the different plays that they do at her school. And they had to use scrap wood this time around because lumber prices were too high and there was a lumber shortage for what they needed. She basically had to go through piles of scrap wood and figure out what would fit into the plans of what she had to build. And what she had to build, you would never know it looking at it from the outside.
There you go. The price of lumber hits us all. I remember Sean, when he was still on the show, he had his fence watch, listeners. He was waiting. He couldn't afford to buy the fence around his house. The lumber was too expensive. I have talked to him since then, listeners. You'll be happy to know the fence is now constructed. So he did pull the trigger, even though the lumber price is sneaking in, affecting us all, even the kids there building the sets for the school play. Who would have thunk it? Unfortunately, listeners, that music means we've come to the end of another epic journey through the world of all things futures options. We touched on a wide variety of sectors. Even still, we barely just scratched the surface, listeners. This show could be 3 hours some weeks, and this week is one of those. If you want to check out more products for yourselves, you know where to go. cmegroup.com/TWIFO or /TWIO, the place to go to run all those reports until your heart is content. And again, if you have a product you want us to break down here on the show, hit us up, let us know. We tend to be pretty nice here, as long as it does some paper. If it does 3 contracts, like a Palladium or Oats, maybe not so much. But if it can do a little more than that, we'll see if we can move it into the rotation for you folks. And Mr. Rhoads, what you cooking up that may interest our listeners, sir?
Well, I'm continuing to put things up on Saturdays on the EQ Derivatives site, just reviewing what's been going on in the volatility space. I've been expanding it to include European and Asian markets. And then a new project just got thrown in my lap. And you'll love this one. It's actually why I wanted to go toward the metals. I'm supposed to be trying to figure out what raw material markets might have a negative impact on the technology sector. Like, what rare earth metals do they really care about? And that's a fun project.
We need to have a lithium and uranium section on the show then. Alas, I don't think they're too deep in the options yet, but intriguing nonetheless, sir.
Yep. And I know nickel goes into stuff. I just want, are we all saving? A nickel is worth like 16 cents right now.
Yes. We haven't even gotten into the madness over there on LME and just the insanity that is nickel. They halted it for, I think, 6 days, something absurd. They reopened it and had to immediately halt it again. Nickel. Who knew the insanity that lie in nickel? That's why you got to listen to this show, listeners, because you never know what commodity, even the most innocuous, could pop off on any given week. And of course, you know where to go to learn more about all things small cap, talking about the vol, the action, recon, not that far away, listeners, as well as everything else, small caps versus large caps correlation, what's going on, all that good stuff, COVID Impact Center, and a whole bunch more. FTSERussell.com, FTSE Russell.com is the place to go to kick the tires and light the fires, listeners. We got to get on out of here. We'll be back again tomorrow, noon Central, 1 p.m. Eastern for Volatility Views. Got a great twofer guests joining us on that show. Should be a fun one. And then back again an hour or so after that for everyone's favorite secret club show, Options Oddities. So tune in for that one if you haven't. Of course, if you can't be there live, check it out on the exclusive members podcast feed. Again, we got to run, but have a great weekend. Stay safe out there, everybody, and we'll see you back here next week. Another episode of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.